Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for Monday, June 3rd, 2019. I'm going to start the video out with just a kind of a very brief recap of the video I did for members, the midday update. But there are a couple new things I want to cover in this video. So the gist of it is what happened today is we started out, the futures had a decent lift off their overnight lows and into the morning, and looked like they were poised to rally. I'm going to get to that in a second, show some levels, but then were shot down hard. So the big news is today was an unusual day. There was a full assault, I call it a blitzkrieg, on the market, really. Namely the big FAANG stocks from the federal government. We had some headlines come out. The Justice Department, looking into Google or Alphabet, parent company of Google, along with the FTC, Federal Trade Commission, looking into Facebook for monopolistic practices and Amazon for antitrust practices. So that knocked the snot out of those stocks. And as you guys know, or have heard me say 100 times, that they are by far the largest components of QQQ. They're also the top weighted components of the S&P 500, although they don't have nearly as heavy an unbalanced weighting. They're still top weighted components, but much more. The SPY is much more equally dispersed among all the components, from the top to the bottom. So it didn't have that much of an impact on SPY. You can see QQQ closed down 2%. We blew right through the intersecting 200-day simple and exponential moving averages, which is where we pretty much parked it at last week. So that's certainly not good from a technical perspective. I made my thoughts pretty clear last week. Earlier in the week, I was leaning towards a rally. That rally never materialized. Every time we started to get going, every time we had a potential breakout, we ran into resistance, we were shot down, and that's exactly what happened today. So I made it clear, going home flat over the weekend. I didn't have an idea, really a good idea where we'd go this week. And today was a bad day. So I'm going to give you my thoughts for whatever they're worth, where we go near term, but make no mistake about it. Like I said in the video for members earlier today, and I've been maintaining for months now, the longer term charts look clearly bearish. Let me get to those before we get into the daily and intraday charts, and then we'll take a look at the FAANG stocks, and we'll wrap this video up. Okay, this is my QQQ weekly chart, or one version. I have a lot of different drawing boards, but yeah, this is a trend line off the mid-2015 lows. Most other indexes pick it up here on the early December 2016 lows, and that's where we broke down. That gave us our sell signal in the fourth quarter. I viewed this as a kickback rally, still do, which now, apparent we, still haven't faded that low, but it's apparent that was just a pretty strong snapback rally. And most importantly, we put in another divergent high. So what's changed in the last few weeks is, you see now we have, last week's candles finalized. That's 4 consecutive red candles. This week is far from over. Anything could happen. But what has happened and is confirmed now is the negative divergence. I like to say when you have that bearish PPO crossover after you've put in divergence, it's then confirmed. And again, that's just something I use. Any textbook will tell you when you're making higher highs on a security like this, and you're making lower lows on the indicators, that's negative divergence. But I have that qualifier, I call it. I want to see the PPO cross down, because that effectively means that's a peak right there. Otherwise, if it's going up, they're momentum indicators. They can continue to go up and burn through. So that's the weekly chart. This paints a bigger picture. When I look at this, I don't waffle around. Right now, in the near-term views, I'll show you levels that may or may not play out. But this looks every bit as bearish, if not more bearish than back then. This scenario was drawn out before we even hit this high, go up. If we did make a new high, it would be a divergent high, and that's what it was. And then we had a clean trend line break. So on a scale 1 to 10, that's 10 for a bearish long-term setup. So this is where, again, if you want to know what I mean by long-term, intermediate to long-term, I should say, I'm talking weeks to months, possibly beyond. And that's QQQ. And then the same story on SPY. This uptrend line comes off the 2009 lows. It's the entire bull market uptrend line. Breakdown back test, divergent high, confirmed, everything I've talked about. Doesn't get really any better than that for a bearish setup. Doesn't guarantee that we're going to go down to the levels that I think we're going to, but I've shared my targets. My targets are probably beyond where most are. I think those that are bearish we're probably looking for maybe a test of the lows in December, and I think we'll continue lower. I think we'll come down here and test the top of the 2015 highs. Is where I think we'll probably head before all said and done. There may be more beyond that if we get there, but let's take it one day at a time. That's just longer term stuff, and I just wanted to mention that today certainly doesn't help the bullish case. It only helps to firm up that longer term bearish case. Okay, so let's start out with this is a post I put on the front page, public content. It was posted in pre-market today. It had the charts of the S&P 500 E-mini futures and the Nasdaq 100 futures. And so what I said is there was a potential that we still had. The bullish divergences were still intact. I'm talking about, like I said, I've been moving these lines down. This is a divergence line. This line is, I don't want to use the word immutable if I have to move it but at this point it is, because we have enough reactions. So, if we went up here and reversed, I wouldn't have a downtrend line from the top to the bottom because it wouldn't connect. It would only have 2 points. So this is my downtrend line. This is just a divergence line. And as I said, divergences, as long as they're intact, you can extend those. So we had a divergent low there. That was our first divergent low right here on the S&P 500 futures. Then we closed the week right there with the divergences still intact. And this morning when I did the video, like I said, they were still here, still intact down below, and they still are right now. And as I said, the divergences were intact. Arrow breaks indicate the key resistance levels, which could trigger more buying if taken out. So and I cannot impress this point enough. I say it all the time. There is a colossal difference between a trade setup and an actionable trade. First and foremost, divergences and overbought conditions are not a buy signal when you have bullish divergences, just like negative divergences are not a sell signal. In fact, by definition, you're only going to have positive divergences during a downtrend. So they're the opposite of a buy signal, if you will. They're merely an indication that a trend reversal is likely. Just like a negative divergences, they can only form in an uptrend. That's the nature of negative divergences. And so the sell signal is triggered once you have a break of a like in this case a bearish rising wedge chart pattern. There is your sell signal right there at this point in time. So as I said this morning, all these arrow breaks or levels which were resistance levels that could trigger a rally. Here's our first arrow break. That was a gap from the weekend close, Friday's close, to when futures opened up Sunday night last night. Then we had, this was the first level, or after that, the first level on SPY or ES, 2765. And if that broke, I figured we'd come up here, hit that intersecting level. And these, by the way, guys, same levels I've been covering for last week or two now on the charts. Maybe I might have added this one because we had that gap down from the futures before we closed Friday. Let's look at what happened today. Again, that was in pre-market before the market opened. So here's the same levels. The ES popped in the beginning. We were rallying up in the open, into the open, and then all the news broke on those big FAANG stocks, Alphabet, Facebook, Amazon. All that came out, and it just whacked the snot. In fact, some of those stocks, they had their biggest down days in years. Some of the biggest down days. Might not be the absolute, but they were down really big today, and I'll get to those charts in a second. So what we had here is really a failure to launch, a failure to break out. In fact, it was a perfect rejection off that level. That's bearish. It shows the same pattern we've been seeing. Right here, we felt a support. That 2765 was support at the time. We bounced and we failed right at the shallowest resistance level I had, about 2800. We couldn't even make it up to the downtrend line with impulsive selling. So this is the trend right now. The bounces early on were a little more impulsive because the buyer, at least that one was, the buyers were stepping in. But at this point, all rallies are being sold into. So that's the trend until proven otherwise. But just remember, no trends last forever. And this is again what makes me say at this point, I still think the risk reward to being short is poor, or especially to add new shorts. If you're day trading, active trading, keeping stops real tight, fine. But they could, just as some headlines really took the market down today, some headlines could ramp the futures overnight and then gap us above those levels. So to keep it very simple, this is a live chart right now. The S&P 500 E-mini futures, if you look down here, they actually they closed. The S&P 500 closed down, or SPY did 1/4% down, 0.25. But futures rallied a little after the close. This is the level right here, and they're virtually flat. So the theme here is that the broad market, small caps were, I believe, were they positive on the day? Yes, IWM closed positive on the day. This was just largely, well, QQQ was almost exclusively down because of the big FAANG stocks today. And I just want to say that overall, it was almost a flat day on the broad markets. Again, small caps being up 0.35%. SPY closing down 1/4 point, not too bad, but slight loss. And we'll get to QQQ in a second. But before I do, same levels, guys. That's it. If overnight or tomorrow or anytime this week, even if we go lower first, which we might, I'm going to show you some things that indicate we could have one jog down before we pop. 2765, that's a level to watch, and then this downtrend line right here. Which should come in right around that resistance level, and I like to see that if we get there for a potential buy signal, when you have not one resistance level 2800 but two, you have a nice downtrend line as well. So it might look something like this if we can rally soon. But again, potential scenarios lacking a buy signal, meaning a break of support or some evidence of a reversal, big bullish candlestick, something like that. All right, let's go to the next one here. That same post. Let me find it for you. Where did it go? Right here. Yep, there we go. Again, pre-market timestamp down here, 8:41 a.m. This was taken. Bullish divergence is still intact on the NQ. Blah 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 blah. Should we rally and impulse a break above the downtrend lines or wedge breaks? So these were the levels we needed. You had a gap right here. Same thing, the weekend gap right there. Then you had the next resistance here coming in, a confluence of resistance. I have two similar downtrend lines. They come in around about the same level and about the 72.16 level. And so we'll see, and you could see the divergences were still intact. Again, that was this morning. So that was then. This is now. Let's find my NQ chart. Nasdaq 100 futures. That was it. They didn't even, they made a backfill of that weekend gap. In other words, got right back to where they were about to Friday's close, and then all those headlines were coming out, and the selling just knocked the snot out of the Nasdaq 100. Now, what did it do? What didn't it do? It simply extended the divergences a little more. I didn't have to move the lines on ES, but on NQ I do. So there's still potential divergences, but no buy signals right now. We need to pop above. It should take, I would think, if we can pop above this morning's highs in NQ, which are about where QQQ's high was, around where we opened today, that would probably spark a rally at least up to the trend line, and then you have to watch that. And of course, you can see the levels there. So that's what to watch on the 60-minute charts. And let's look at, I know a lot of you trade QQQ and SPY, so let's go there real quick. SPY 60-minute, these are the same levels I've listed in recent videos. Here we have this wedge type pattern right here. So I have two downtrend lines. So let's just color this one. Let's make this one a different color. We'll color that one yellow so it'll stand out. So there's a minor downtrend line. We still have the divergences as well on the SPY 60-minute chart, just like ES. And so therefore, there's still potential for rally. There's a previous reaction low that we're at. And if SPY can pop this little wedge here, then targets would be, this is a comparable target to what I showed you on ES a minute ago. Run up here to about 280. That's comparable to the level I showed you on ES. And then you have the downtrend line coming in as well. Probably get a reaction there, and if we can punch that, we might get that rally that I was looking for last week that never materialized. And we do. That's about a 2% lift to get there. Let's focus first things first. We're still in a downtrend. I cannot be clear enough on this. The stock market is in a precarious position. With every tick lower, we increase the odds that that rubber band will not just stretch and then snap back like I talked about, but will actually break. Pull a rubber band too hard, it breaks. What am I referring to? Forced selling. We've come down. The selling has been relentless so far, and you have individuals and institutions that will continue to be hit with margin calls for selling. Those that were too leveraged long on with long positions. Crude oil is dropping because that's obviously correlated with the stock market. Has been for months now. So with crude going down and the broad markets, you're looking at potential to trigger kind of a floodgate, if you will, of margin selling. Plus institutions, they haven't done so already, which I'm sure some haven't. They have to, enact risk control measures. I'm talking about pension funds, things like that. They can't just sit and hope and pray. Retail investors will do that. Institutional, professional traders or managers managing multi-billion-dollar pension funds need to seal the leaks if things get really bad. So then what happens is selling begets more selling. You transfer money out of your 401k because you're feeling the pain, or you call your broker and say, sell my mutual fund. Those mutual funds in the 401k or out of the 401k, they have to then turn around, sell the stocks that they own. They have no choice. They can't go on margin. They have to meet T+3 settlement, meaning they get a redemption from you. They've got 3 days to give you that cash, and if they don't have it on hand, if the fund has a low cash balance, most funds run anywhere from down to, it gets dangerously low around 1%. Sometimes they're maybe as high as 5% cash reserves, on hand. But when they get a lot of redemptions, they need to sell more of the stocks that they have. So that's where those big waterfall type sell-offs come from. I still don't think today was pretty bad. Today was almost, I would call it almost a waterfall sell-off in QQQ, but again, we didn't see it across the board. SPY held up, and the small caps were actually positive today, so I wouldn't consider this a waterfall sell-off yet. But I'm not going to mix words. Possibilities there. There's QQQ, what it looks like with today's big candle. And then I wanted to show you the QQQ 60-minute chart. That's right. There it is. Divergences are hanging on by a thread, but like I said, they're still there in the futures. They're still here. You can make equal lows on your indicators with lower lows on prices. That's still divergence. You just can't make lower lows on the indicators. So I don't want to split hairs. And sometimes you get divergence on one or two indexes, not the others, and that's no big deal. So like I said, divergences are not a buy signal, but what's a buy signal? A buy signal would be, for example, a break of this downtrend line, a break of the levels I showed you on SPY and NQ and ES before. Otherwise, like I said, my convictions aren't very high right now. I told you going into the weekend, my convictions weren't high. Tomorrow can go either way. I'm ready to jump into the market if that rally starts, but I'm sitting back waiting for, I'll show you what I'm waiting for and what we could get tomorrow. If we don't get a buy signal to the upside, the next levels might provide a long. Like I said, it gets tricky here as we're starting to fall. We could get to that waterfall type selling. I'm still leaning against it for right now before we get a decent rally, kickback rally first. I think it'll come later on, maybe this month later, maybe next month, but let me show you what I wanted to cover here. All right, I want to go through the FAANG stocks for you real quick. All right, and this is, remember these, I call them FAANGs, Microsoft, Amazon, Apple, Alphabet, Facebook. Those are the top 5 largest components of QQQ. They're 4 of the 5 largest of the S&P 500. So if you want to know where the market's going, you got to look at these guys. Microsoft was down big. It didn't start the day down so much. It was that forced selling. What happened when Amazon, Alphabet, and Facebook all got clobbered, eventually that led to forced selling in QQQ, and that spills over to the other ones. I've talked about this before. Live by the FAANGs, die by the FAANGs. When they start breaking, you get a lot of forced selling that comes out of them. So Microsoft was down, but here's where I'm going with this. When I'm looking for an area to bounce, right now the levels that I have on SPY and QQQ, I do have some support levels coming up, but they're not as clear. I see pretty clear levels on my FAANG stocks, and I'm showing you those levels right here. I have about 115.27, we'll call that 115.30 on Microsoft. That's an uptrend line that I had coming in from a long time ago. It was breached here, but either way, that would be in this scenario would play out well. It might not happen, but if we got a thrust down in the futures overnight, another drop overnight, and that's a pretty big drop. That's about 3.25%. But if we got it, I can tell you that Microsoft would hit a pretty decent support, particularly that horizontal support level right there. So there's Microsoft, and it's in no man's land now. Usually, not always, but usually these, you know, you don't get a significant rally when the majority of these market leading stocks or the market itself is smack between support and resistance. If we do get one, and it's certainly possible, I showed you those levels on the 60-minute chart. This is what I'd be looking for: a push back to this level on Microsoft, and that would be about a about 3.5. Let's call it 3.5%. Here, I'll put a line there for you. There's some resistance there. Let's go through the rest of them real quick. Amazon. See, here's the thing, and these are levels I've had on these charts for a long, long time. These were targets. Actually, it's funny. These were targets that I had back here when we put in this divergent high. These were my price targets for Amazon then. I haven't modified these or touched them since before we even topped back last fall. And you can see we went down, hit my first target, bounce, second target, overshot a little, went through it, bounced, but then finally hit my final target there. Again, laid out in advance, and then boom, rallied. Now, those levels still act. They still, the technicals or Amazon still respected those levels on the way up. I'll show you what I'm talking about. So once we bottomed after hitting my final target, we came up here, reversed just shy of that target there, that former first price target, broke it here and back tested. Look at all those candles on it. So that means that is still a significant level. And we closed above it on Friday, but then boom, big gap down below. Remember, this one was knocked down on the news. The FTC's got their eyes on them now, or crosshairs on them. And here's my point again: is this one's in what I call no man's land, technical no man's land. That means smack between support, 1616, and resistance, 1752, or you know, give or take. That was support before. So, and again, almost coin toss odds, and I'm not trading coin toss odds. I'll just wait. But that would coin toss odds means we get a rally tomorrow. If something can pop this market, it would probably take a headline. And if so, you're looking at actually from where we closed, about a 3.94%, and that roughly meshes with that kickback rally in Microsoft. Or we continue on down and hit that 1616 target, about another 4% drop. But either way, when a stock is in no man's land between support and resistance, I try to stay away, because you know, to short it, you're risking a kickback rally to resistance, and that would give back a lot. And to go long, well, you haven't hit support yet. There's no real objective reason to go long. And don't get me wrong, the long-term charts look like death. This just topped. We just put in this divergent high. This is just what I view again as a kickback rally to the initial leg down. And here's one of several stocks, many stocks that never went up and regained or retested, made it all the way back to those 2018 highs. So Amazon, technically, I believe this is the bull market top. You know, we'll go down in the records as, you know, August of 2018, the bull market in Amazon ended and a new bear market started. That's the theory I've been working off of and going off of now. Weekly charts convince me that even more than this daily chart here. And then you have this smaller wedge, similar wedge, but a smaller breakdown back test. That makes sense too. This was just a counter trend rally. This was the end of your primary leg up, big wedge, and then broke down, and then you set up this smaller wedge right here. Oh, just like back then, we were overbought. Overbought plus divergent high, breakdown back test, boom. And then see, this is not good. If these stocks can't recover tomorrow, and again, I wouldn't step in here yet. I'd rather see it happen, see the charts firm up. We're starting to get to that impulsive type selling at this point. Again, yeah, it was news driven, but I always say this: news will very often follow the charts and follow the technicals. And in fact, I was saying that, you know, on the way up a few months ago, that, you know, when everything looked like the market would never stop going up, I said, it'll go down, and mark my words, the headlines will follow. Everyone that's bullish and calling for, you know, rally into 2019 and beyond, and no recession in sight, maybe down the road in 2020, all that would change. All that rhetoric would change, and it has quickly. If you scan the headlines over the last few days, man, everything looks bearish. So that's that. All right, I just wanted to say this is why coin toss odds, whether we continued on down this week, hit these levels on these big FANG stocks, or we have a kickback rally first, which may provide another objective shorting up and then go down and hit those. I have very little doubt we'll hit them in the coming weeks. It's just a matter of near term. I don't know. Apple kissed the 169.78 support. If you remember, well, if you followed me long enough, back I have similar yellow, orange, and red lines on my S&P, SPY, and QQQ charts, meaning these are the danger zones. Yellow, you break orange, it gets even worse. Apple's broke our yellow, my yellow, their support levels. Number one, we parked on that one Friday around that 175.51, and we shot down intraday and kissed this 169.78. Now it held, but again, they're color coded, meaning you break orange, that's not good. You break the red, get out of Dodge, especially in the markets. Now Apple won't single-handedly take the market down, but that's a level where I think if that's broken, these lows from 2019, just as with the market, will be cut, and they'll probably be cut in a waterfall type sell-off mode, where again, it's I think where I differ from a lot of people is if and when we get there, I think a lot of people will be calling for a test of those lows and maybe buy and go on back up to new highs, where I think it'll be kind of going right on through there. Maybe a brief pause around there, reaction, but nothing much. But again, we're not even halfway there, so we'll see if and when we get there what the charts look like. I will say Apple's oversold, but you know, oversold right here, and you see it just led to a little bounce. People will buy these oversold readings, but if there's a lot more to come, as I suspect, any bounce will be a shortable bounce, and with another leg down, just like we had here on where the crosshairs are, and then we became more oversold. And it was only until Apple put in that divergent low back there in the December lows before we got a nice rally. All right, so that's Apple, and it held up relatively well, only down 1%. Remember, Apple's already kind of led the way down. Alphabet, here's Class A, shot down below. Here's a support level. This is a big support zone that I have down here. We can even widen it up a little, but it's down around 1,000 to about 1020 or so. And so there's another one of my stocks, market leaders, and again, knocked down on the Justice Department, DOJ news. But there's a support zone that it hasn't yet hit. These indicators look ugly, pointing straight down. Remember the PPO and RSI, these are momentum indicators, and they're telling us right now the momentum's down. So you know, dip buyers, anything's possible, but yeah, I cannot make a case to step in and buy Alphabet here at this point in time. Maybe down here, probably down here, but we'll see. And anything's possible. Like I said, if the market breaks, we've seen this on the way down. I've showed you support levels that the market could have and should have bounced, but it didn't. And that also goes back to what I was saying a month or two ago before we even topped. I said, this next correction, I will gauge it as it goes to try to see if it's, you know, the nature of it. Is it just a correction to buy, a buying up on the road to new highs, or is it the start of something more? And let me be very clear. Every single thing I've seen so far says this is just the start of something more. And by that I mean the fact that these divergences that I've been talking about for the last week now have failed to play out for anything more than just the slightest bounce that got sold into aggressively. That we've hit one nice support level after another on these market leading stocks, and at best we got a little, you know, tradable bounce off it and then new lower lows. So it tells me that dip buyers are just being overwhelmed with sellers as they step in to buy the dips right now. So make no mistake about it, the charts are ugly, and if you don't know what to do short term, either be out of the market, or if you have, you know, taken money out of your 401ks, or you have swing short positions, you might want to just ride out the bounces and you know, go for the long game, which is, you know, a much deeper drop. There's other share class, GOG. You can see those levels a little more clearly there. So you had a big gap overhead too. So if you're looking for levels to, you know, with short, well, you have a gap to contend with there, the bottom of the gap and then the top of the gap. Those are natural resistance levels. And then really we don't have solid support to down here. And I'll say that this again, I feel pretty clear that at most, if we rally now, we're going to hit these levels before this stock finds a bottom, even if we are going to new highs. but or even for just a tradable bounce, I think we come down here to this support zone. But I also take in what everything else is doing. So what I mean by that is I can tell you right now, I can't tell you if I would step in and buy Google if it got there, because I want to see what Apple, Facebook, Amazon, what the S&P 500, what QQQ, what they look like at the time. If I don't see in a downtrend like this, if I can't line a lot of ducks up in a row, or a lot of check marks, I should say, to go long, it's not worth it, because we could just take that level out and keep going. So Facebook. See, Facebook, another one. This is a common theme, and this is why I wanted to get to these. And I know I'm talking on these for quite a bit of time here, but this is where my mindset is. Again, from my experience, when you get this close to a well-defined support level, these are targets I've had on Facebook for a long time. Support level 159. You can see it's a well-defined support level. If you're not sure what I'm talking about, I get these questions all the time. How do you come up with support and resistance levels? Reactions, big gap below it. Reactions from above, reactions from below. There's a reaction, pull back to it right there. There might even be some more to the left of the chart. So I think Facebook's coming to 159. To me, it's a matter, will it hit this week? And if it does, it'll probably be tomorrow, maybe the next day. And if not, we'll probably bounce first up here to my next resistance is about 172, and then there's a gap above that, so we'll call it about 172.80 up to about 176.80 or so. That would be my max bounce target, then a move back down there, and that's right now. So that's about it. A couple others. A note: Cisco. Cisco's just coming off that divergent high, coming down here to at least 49 before all said and done, at least. And then Intel has been holding above that $43 support for a while, still holding in there like a champ, but I have a support zone that runs all the way down to about 41.64. So we'll see. Okay, I want to wrap it up here. Before I do that, I'm going to remove this divergence line now. I'll show you why. Because see, remember we had potential RSI divergence on the RSI, and that's gone. See, we had at the lows back in December, one thing that got me bullish at the time is we had positive divergence on the RSI down there, not on the PPO, but on the RSI. We no longer have any divergences now. They have been burned through on the daily chart. We do on the 60-minute chart. And 60-minute charts just tell me that's shorter term stuff. That's, if you're an active trader and you want to play a bounce that might last a day, 2, 3, 4, 5 days, maybe a week or more. But on the daily chart, I see very little reason to step in and buy right now. And then my downside, if we get that one more thrust down before we rally, that's probably in line with those downside targets on the FAANG stocks I just showed you. And a kickback rally would look something like that. There's a potential downtrend line on the daily chart as well. That's not very well defined. Just focus. I think it's better to focus on those 60-minute trend lines for any near-term stuff, which is right here on QQQ, and then SPY. SPY has, of course, that minor one very close, and then this secondary trend line there. All right, we'll wrap it up here. We'll pick it up tomorrow. Like I said, keep things light if if you're not sure what to do. There's no reason to be in the market. Like I said, I think the risk reward, I think the possibility for a meltdown is there, it's starting to increase. I don't think we're going to get it yet, but I'm not going to bet against that. I just, again, if at this point in time, it's just not worth it to try to short and gain another 2-3%. And I'm talking new short positions. I'm not talking shorts that were shorted here and you're trying to hold for that move down. Like I'm talking another 20-something%. At that point, just if they're swing positions, ride out a counter trend rally with a stop somewhat above. I've given you levels that should contain any upside target, and I will certainly kind of sharpen my pencil on those levels if a bounce starts to materialize anytime soon, whether it's this week or next. And by that I mean I want to see some bullish reversal candlesticks. I want to see those some resistance levels get taken out instead of being shot down like we were today at the earliest bounce back to the shallowest resistance levels that I had on my chart. So those are the things that will tell me, okay, maybe we're in bounce mode now. And like I said, here was a bounce. There were a couple, bounces about in the 8 to 10% range in that last corrective wave down in the fourth quarter. and those are certainly profitable to trade if you're an active trader. But if you're, not sure what to do and you're happy you have some good entries on shorts, just tuck them away and you might be able to, have a nice runner trade, I call it. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.